Hey guys, how are you? Vladimir Ribakov here from Traders Academy Club. This video is a weekly trading performance review for the SRS trading for the week of 21st to 25 of October 2019. So we continue with our routine and reviewing the performance and the trades we took on the week before, explaining the logic and the technical analysis standing behind them. As you can see on this image at the beginning of the video, SRS Pro is finally here, available and ready completely. You can find the link to that in the description below the video. SRS Pro is the latest release of the SRS Trend Rider. Both versions of SRS 2, which I will review now in the performance, and the SRS Pro would be used, reviewed and traded. This video, its purpose is educational, to explain the logic behind each and every trade we take, explain the analysis we have before that and how this trade worked or failed. The idea for us is always the same. We analyze the market in advance and we choose the directions we plan to trade. Then we are waiting for these directions to happen, meaning we are waiting for setups in these directions to appear. If they appear and they stand for the rules of the systems we use, we take it, and that's what you will see now in front of you. So right now I want to review the trades. As always, this is available for you in my blog. You can always access here and to see the trades we do there for you. When I say we, it means my team and myself. So let's start with the first trade from previous week, the EURCAD sell. The logic of this trade was very simple. What we had here on this pair is a blockage of this resistance, a bearish divergence on the latest part here, and a bearish divergence on the daily time frame. It started from the bearish hidden here and flat moved to bearish continuing divergence on the MACD. The way it performed basically taught us very simple structure. First leg in an up move, double wave correction. Second leg with bearish divergence on itself and on a bigger scale. So we at least expected to see corrective cycle down to this range. It turned to be more, but that was at least the expectations we had. And this is exactly the reason how we approached this trade. So we had our range, we expected at least to the bottom of it, we got our good opportunity inside, entry was done, and the pair delivered. Next one in our list was the EURJPY sell. Beautiful setup of a bearish structure, 3 lower highs, lower lows, and 2 waves correction, ABCD correction. We got a trend line broken, and the idea was to go for sell, and this pair delivered as well. Why were we looking for the sells from the very beginning? The answer here as well, very simple. We were in a triple cycle from the daily chart with a bearish divergence that you can see on the MACD. We got a beautiful clearance zone cleared here with a classical piercing pattern, almost an engulfing, but in that case ended as a piercing pattern. Beautiful combination, the respect of the psychological zone around 175, in that case slightly higher. The fact that we also got a piercing on the top of the 4-hour chart with a great divergence on the moving average on the bigger scale. And from that moment, basically what we got was the break of the trend line and the expectations to continue lower. After the first move down, we get no signs against us. There was no bullish divergence here. So our plan was to sell the rallies, and that's what we got here. And the pair, in that case, delivered. So the analysis starts from the higher time frame going through the lower time frame, verifying synchronization that everything is rhymed and lined up, and trading it once it gives the setup. Next opportunity was the intraday, and it was basically a couple of days later, right here. The idea here is again very simple. We have no signs on the ending divergence here. It developed right now. After this divergence, the first divergence, we got the corrective cycle which happened in two waves. So the analysis remained the same exactly. Two waves delivered on the 1 hour chart in an ongoing trend of the 4 hour chart, and we drop to the 15 minutes to find our possible entry. And here we are. So basically what we got, the bigger ABCD breakout from the 1 hour chart, the latest ABCD breakout from the 15 minutes chart, and due to this fact and the fact that this resistance was fall breaking, we entered this sell with a small protection in that case. Another good thing here is the fact that we have our rallying structure, both the charts, both the SRS trend rider indicator crossing. It's just for the verification. We are crossing down, gaining the current momentum bearish, and this trade delivered as well. Next one, going to the pound dollar, going a bit back. So what did we have here? Again, very simple, bullish structure, classical structure, higher highs, higher lows, big two waves retrace, smaller two waves retrace, and the idea was to expect that for continuation to the upside. In that case, after starting good, the pair, with all the sensitivity of Brexit, unfortunately failed, and we ended up on a loss here. Now just to briefly have a look on the bigger time frames. Pound, here we are. So we were at this place where we got the bearish divergence rounding down. We expected a correction, we got the correction. A bullish hidden divergence was building up. 1 hour chart, oops, here. 1 hour chart delivered its own correction in the two wave structure with its own bullish hidden divergence from trend continuation, and the expectation was for further move up, and it lost. Then it became short-term bearish by completing a false breakout, and that basically all the trend lines breakout and the creation of lower lows, but it happened only further on. So until then the view was bullish. In that case we were wrong and ended up with a loss. Our next one on the list will be the UK index. So what did we have here? A bullish structure. First of all, one shot to the downside, which was suspicious by making a false breakout here, immediately bouncing, right? From the round number of 7,000. Strong engulfing. Then bullish structure here, and two waves retrace. This is a bullish trading structure, so the view was bullish, and it has to be supported by the higher time frames. Watching on a higher time frame, we get a bullish divergence as last active divergence within this range and within a bullish structure by itself. Daily supports the view by clearer moving average divergence, and the view was at least to get a deeper correction to the upside until we will get the next divergence, which happens right now, okay? But until then the view was bullish, and in that case the UK delivered. I have to admit it was not one of my favorite trades, but when my traders presented it and everything met the rules and the analysis, I had nothing else but to say it fits in the rules, it could be traded. I'm not a big fan of longing the indices on the current price, to be fully transparent, but when technical it's good, it's good. And in that case, they were right and it delivered. So the next euro kiwi we discussed about, and the last one was the dollar versus the yen from previous week. So what's the analysis we have here and what do we trade? According to the weekly double cycle with bullish divergence, we are bullish, expecting this correction towards the area of 38.2 of the correction. Daily was developing the second leg, little pullback, and we expected further continuation. And on the 4-hour chart, we were building up the bullish structure. Okay, 3 higher highs, 3 higher lows, 2 waves retrace, and bullish divergence was building. And that's pretty much it. That's the analysis. That's why we are bullish. And then we simply drop to lower time frame, looking for possible setups. And what we got here was very interesting thing. First of all, a false breakout right here with a strong reaction to the upside. Second, even if it's only a small correction, we still expect it to reach towards the 50%. So this or other way around, even if it's not about to continue the higher time frame trend, we still have the room according to this own structure retrace. After 3 lower highs, lower lows, we go to around the 50. So this or other way around, we had all our room to go. In that case, it worked. Then continued higher, but it worked, delivered, and that's pretty much it. So that's our pretty good trading week from the previous week using the SRS 2. And right now, SRS Pro is available as well. You can find all the details you need in the description below the video. You can find the link there. Of course, you can find the link here as well. And as I mentioned before, right now we will support both of them. In a few weeks period, you will start to see the track recording and the review of the performance for both SRS Pro and SRS 2 of the weekly, of course, weekly performance. They will both appear in the blog. So right now we open the door for that. Soon the trades would start to appear as well. That's all, my friends. Thank you very much for your time watching. I hope you find this video educational, helpful, explaining clear enough the analysis we do in our trading, and you use the same techniques in your trading to enjoy the SRS trend riding in its best. Thank you very much for your time, and I'll see you in the next videos.